Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So yesterday market finally has shown the pullback that we discussed in the weekend. So in the beginning of the session it was seemed that it was just minor retracement, and we even talked about the possible downside XOP target. But later in the session, maybe somehow the press conference of the Jerome Powell has made impact, but euro currency has started the upward action. But currently, with this upward action, euro still is not answering on a major question. So whether we have already double repo in place, I mean on the weekly chart, and we're going higher to the target that we have specified. Because now euro currency stands precisely at the point where the bounce scenario is still possible. So to get the confirmation that we're going higher, market has to show some signs of the breakout of the intraday levels and coming close, at least coming close to the point that we have specified, 104.45. It would be better if even market will start breaking it up. Only in this case we could say definitely that probably yes, reversals happen where I haven't kind of the double repo lookalike pattern I have explained previously was the difference and why it also might be treated as a normal bullish pattern. But for now, market still stands at the same break-even where as bulls have chances to think about possible upward action, as bears still doesn't have yet confirmation that the bearish scenario has been destroyed. So if on the daily chart on the euro currency we do not see anything, but if you take a look at the dollar index, you could see that here recently we've got the bullish grabber. It's difficult to say whether it's just byproduct of the recent volatility, but now it stands in place anyway and carries some risk for performance of the euro because it suggests higher action on the dollar. So this is the first moment. If we continue to speak about the cross-market analysis on the Great British Pound, we talked about the breakout of this level, if you remember, down. And in the beginning of the session yesterday, the market was right there, but now it returns right back up. At the same time, the shape of the right arm, it's a bit very choppy. And we do not have here some clear thrusting action. So although market makes some bullish steps here, it's still, they're not really too strong. So to treat it as a absolute confirmation of the possible upward action. So in the current circumstances, it might be a bit difficult to make the decision concerning the position taken. So on the fall time frame chart, you could see, for example, that market has completed 222. This is the pullback that we actually expected. But for now, as you can see, with the same degree of the probability, we could suggest downside butterfly. So while market stands below our invalidation point, the butterfly is still possible, and market could keep going lower. On the hourly chart, market right now stands in upper ABCD XOP target, which is creates the perfect agreement with the 103.86 area. So this is the resistance, and here actually the points where the bears have to make the decision. We're taking the short position with a suggestion that market could return back to the lows, or maybe do not do this, and just if you think that market looks bullish, then probably you should ignore it. But this is the point where the bears have to make the decision, because if market will break it up, this will be a really big challenge in favor of upper continuation, and the bearish context probably will be destroyed. So this is important level. We also mentioned it in our weekly report. what the compromise might be, if you are not sure, because indeed our prediction looks more or less significant, and where this is actually fair to be actually worrying about the possible bullish performance. The compromise might be is around possible bearish patterns in this area. So, for instance, you are not sure, you are scaring about to take slightly to take the short position right now, although you would like to. In this case, maybe it makes sense just to drop your time frame, save to 15-minute chart, and see what will happen around it. So once some bearish patterns will be formed, the market will confirm that it indeed intends to try to move lower, the position could be taken. Otherwise, in the current circumstance, maybe we need to wait for a bit more confirmation and see what will happen. But that is actually the point where the market right now stands. It is break-even point between the bulls and bears. So upper breakout moving back to the C point tells us probably we're going higher, and it means that the double ripple probably will start working on a weekly chart. If this will not happen, the market starts turning down, that leads us to conclusion, or at least to watching over this potential pattern, and tells that bearish scenario is not off the table totally. So that's what we have currently in place. As a bottom line, for the bears, this is the point to make a decision. Either you're just trying to take the position, or you're waiting for some confirmation in lower time frames, or you're waiting starting of the downward action, then trying to take position on some retracement. But that's the points where the decision on taking short position has to be taken. For the bulls, in the current circumstances, I would prefer to wait for more signs of the pressure on to the upside. So, for example, if market will break the 618 level at least, so that just will be safer. This will be significantly change the equilibrium in favor of bulls if we will get this breakout. That's actually all that I would like to say currently. Let's see what will happen. And today, guys, all attention will be to the CPI. Since the inflation expectations are rising, CPI could make a significant impact on the current performance. So, for example, it really could become the driving factor for downside action on euro if inflation will show the increasing. So, that's all probably.